making sure deals get closed. Now, from our context, it's going to be in the process of selling businesses, of finding companies' capital. These 10 items we want to walk through. Part 1 today, part 2 later this week, 5 in each. Going to go over some of the key ways from our experience we've ensured that deals that are at the offer and acceptance stage ultimately push through diligence and get closed. And how do we optimize those probabilities and make sure every deal that gets signed, if you will, gets closed? Because there's a lot of deals that you'll read headlines about in whatever industry you're in, until something closes, it is not closed. So announcements versus closings are very different things. So let's dig into it. Key item number 1 is to be upfront about any adjustments or normalizations. And so in the business world, we are oftentimes normalizing the profitability of the business to modify non-recurring items, to eliminate any personal items, to try to give a more accurate picture of what the profitability of the business will be on a post-transaction basis, more accurate illustration of the true cash flow and power of the business. You'll see it in real estate as well. If it's a pro forma rent roll, you'll see it in lots of businesses. And these types of normalizations are fine and typically a negotiated point. It's something that two parties can have different perspectives on, but ultimately gets worked out. However, it is important to be upfront with what's the actuals versus what are the normalized or the adjusted, and then that allows for more honest dialogue. Again, don't mistake this with, you do not need to be self-deprecating. You do not need to put down what it is that you're selling or representing. However, at the same time, you do need to be upfront and candid, and it does create a good rapport to try to negotiate for as much of the normalization being kept into the pricing or structure of the deal as you can. Number 2 and 3 both revolve around the same concept of being clear as to what has been agreed upon. So oftentimes, and again, we're talking from the context of the deal is most of the way through and just about at signing, if you will, and then pushing forward into diligence to closing, and whether, again, in our business, selling businesses or finding capital, but it can be applicable to anything, be clear with what is actually being agreed upon. So the first item of this is going to be being clear about the structure. And so someone might say, I'll give you $1, but you have to be very clear how much of that is at the closing. Is there any component over time? If there are components over time, what is the structure? What are the contingencies? What are the other things? If there's part of it that's a deposit for something, if it's not, but understand how does the actual dollars trade hands from one party to the other, at what juncture, and what things that must happen. Make sure that's crystal clear, because the I'll pay X or something can lead to a lot of issues if it's not specifically agreed upon by everyone very clearly and concisely. And the second part of this, and so the third prong here, is be clear about what's agreed upon relative to the roles and responsibilities. So in a business, for instance, oftentimes when someone is buying a company, they will expect that executives, management, employees do certain things post-transaction, that certain people stick around for a certain amount of time, that they provide a certain amount of support or services. And in any of those situations, it needs to be agreed upon very clearly. What will the compensation be for that as well? Because if you're selling a business, you can't sell the business and then be expected to work for free for a year, effectively take your salary out of the price you're selling the business for. It has to be agreed upon what the specifics are relative to the deal, and if there's any ongoing involvement for the owners, executives, sellers, it needs to be clearly defined what they're expected to do, as well as how they're expected to be compensated by both parties. And this needs to be agreed upon by both parties. Number 4 of making sure deals get closed is make sure there is a definitive, and again, agreed upon path between the handshake of yes, we should do this, to the actual closing and dollars trading hands. So even taking the example of us selling a business, if a client hires us to sell their business, we are defining to them a 6-month path, 100 days to the offers, the second part of that being the confirmatory diligence of the acquirer. And within each of these components, there's several sub-steps. And the more clearly that can be defined, the more the expectations for all parties are on the same page, and the higher the probability that it's going to go through all of those stages. And so in any deal that you may be involved with, or any transaction, upon everyone saying, I think we have a deal here, in your mind, it should really just be starting of what is the path now from everyone agreeing on this to documents getting signed, further diligence that's necessary, dollars getting teed up to be sent from one party to the other, the actual consummation of all of these things and signing of these things and trading of dollars, services, products, offerings, buildings, businesses, whatever it may be. Again, we always use the analogy, donuts or doorknobs, doesn't matter, but the path needs to be clearly defined. The last point for this first video, number 5, is make sure the other party is capable of doing what they say they're going to do. I could tell you that I'm going to bench press a car and run a marathon and be very captivating about doing that. However, as we say, in God we trust, everyone else must verify. And so, if someone is going to buy something, if someone's going to pay for something, you need to say, what has been your experience? Have you bought things like this before? Have you done similar things like this before with some other organization? And for this particular transaction, how are you going to do it? Do you have the means to do it? Can we have some indication of how? Do you have partners? What are their roles? Can they get on the phone? Can they verify too? And so you want to get as much proof as to the capability, because everybody wants to do things in this world, and there's a smaller subsection of those that will actually do the things, but even smaller yet are those that want, will, and can. And so that's the part that you really need to focus on too, to make sure that, again, once you're agreed upon, you can actually get to the end destination there. And so that's part one of making sure deals close. And so let's recap the first 5 points here. Be upfront with any adjustments or normalizations. Be clear in what is agreed upon relative to value and structure. Be clear about what is being agreed upon relative to roles and responsibilities. Make sure there is a definitive path. Number 5, make sure the other side is capable of doing what they say they're going to do. So the next video, we'll dig into number 6 through 10 of key areas of focus to make sure deals close. Hope the week's getting off to a good start for everyone. Keep pushing forward. God bless. We'll see you next time.